Hello, good morning. You've tuned into CNBC TV 18. You're watching Power Breakfast with me, Vinny Motiwala. Along with me is Mamakshi Dore as well. Mamakshi, good morning to you as well. And today what we're seeing, yesterday we woke up to Operation Sindoor. There is some bit of a artillery firing that's going around the LOC and the international borders as well as what we're waking up to today. Morning.
Well, absolutely, Vinny. You know, the markets on account of this were nervous yesterday, especially the benchmark indices. They ended flat. But the broader markets, they did quite well. So we'll have to wait and see how today's session pans out. And on that note, let's get started with the top headlines.
Absolutely. We'll get started with the top headlines and starting with the headlines coming in on Operation Sindoor. Now, heavy artillery firing along the LOC and the international borders following Operation Sindoor. 15 civilians and 1 soldier have been killed in Pakistan shelling in Jammu and Kashmir's Poonch, as well as government calls for an all-party meet later today. India's air defense units activated along the border to tackle an eventuality.
Amid rising tensions between India and Pakistan following Operation Sindoor, authorities enforced a complete blackout in Jaisalmer. Several areas in Amritsar experienced blackouts during mock drills. Residents asked to remain indoors.
And Defence Minister Rajnath Singh says India only targeted those who killed innocent people, while Pakistan terms India's strike an act of war and vows to respond at a time and place of its choosing.
Wall Street ends higher after Fed leaves rates unchanged while investors dial back hopes for June rate cut. Trump says he won't lower tariffs ahead of US-China talks. Asian markets mostly higher in early trade.
And Elon Musk Starlink gets nod for satellite internet services in India. The telecom department issues a letter of intent. Government to consider grant of final approval on fulfillment of all license conditions, security protocols as well.
Well, let's get started with the top news and the latest development from the India-Pakistan border. Pakistan resorted to heavy cross-border shelling post-Operation Sindoor, which hit terrorist infrastructure in Pakistan and Pakistan-occupied Jammu and Kashmir. Let's go across to Parikshit Luthra for the latest developments. Parikshit.
Things continue to be tense at the Indo-Pak border. There are military drills taking place by the Indian Air Force and by the Pakistani side as well. Overnight, there has been firing at the LOC, at the international border, at different places like Aknoor, Baramulla, also Poonch. As of now, the casualty figures that we have, 15 civilians have been killed on the Indian side, over 40 injured. That number could possibly go up. Now, as far as the Pakistani side goes, we're learning from reports in the Pakistani media that over 30 people have been killed on the Pakistani side and 46 have been injured. Now, what the Indian side says that they have been targeting only terrorists, and Operation Sindoor to target those 9 terror camps is over. But our defensive alert remains very high right now. Having said that, we are looking at air defense units all along the line of control and the international border being activated. There were mock drills which happened at Amritsar. In fact, there was a blackout initiated in Amritsar with people being asked to stay indoors as much as possible. Unfortunately and tragically, 1 Indian soldier has died in Pakistani firing at the LOC and the international border. So this is tragic news coming in. Pakistani Prime Minister also addressed the nation yesterday, and he vowed to take revenge and back the forces for any kind of operation they undertake against India for that strike on Pakistani terror camps.
Okay, Parikshit, thank you so much for that latest update that's coming in here. But let's also listen into Defence Minister Rajnath Singh and what he had to say, saying that India has exercised its right to respond to the attack on its soil. Listen it.
हम कह सकते हैं एक तरीके की सटीकता, सतर्कता और मानवीयता यह हमारी भारत की सेना के जवानों ने दिखाई है, जिसके लिए मैं हमारे सेना के जवानों और अधिकारियों को पूरे देश की ओर से मैं साधुवाद देता हूं और सेना को संपूर्ण संबल प्रदान करने के लिए अपने प्रधानमंत्री माननीय नरेंद्र मोदी जी को भी मैं साधुवाद देता हूं।
Now, even as world leaders call for restraint from both India and Pakistan, US President Donald Trump says that he can do anything to help the situation. Parikshit, please can you give us more details on this one? What are you picking up from this in terms from the diplomatic angle as well now?
Well, the United States has been expressing a lot of concern with the India-Pakistan situation because these are two countries with nuclear capabilities, and that is indeed a worry for the world. Having said that, Donald Trump has gone on to say that he is willing to do anything to help both India and Pakistan. He knows both the nations very well, and the situation between India and Pakistan must stop and must stop immediately. US NSA Marco Rubio has also tweeted to say that he's in touch with India and Pakistan. He's monitoring the situation very closely. NSA Ajit Doval has spoken to his counterparts in Saudi Arabia, in Russia, in UK, in the UAE, France, and Japan as well. External Affairs Minister Subramaniam Jaishankar, he has been calling his counterparts in Japan, France, Spain, Germany, Qatar to explain them India's intentions in carrying out these strikes. And we have made it very clear that this was only intended at Pakistani terror camps and not against Pakistani civilians, the army, or the Pakistani economy for that matter. Having said that, Foreign Secretary Vikram Misri also held a briefing for envoys and said that if Pakistan now responds, India will respond too. Clearly, the ball is now in Pakistan's court. If they respond, India will definitely respond. But if Pakistan escalate things or tries to go in for a full-blown conflict, then India will have no choice but to defend itself. And that's why our level of preparedness remains very high. We are on a defensive alert. So we are going to continue seeing mock drills around the country. And over the next few days, things are expected to remain tense between India and Pakistan. We've been hearing of a lot of air drills from the Pakistani side, from the Indian side. A lot of reports there in social media, which are absolutely not confirmed. A lot of that is fake as well, coming in from Pakistani propaganda machinery. We have to be very careful for that. And all our viewers must take only confirmed information coming in from the Indian Army, the Indian forces, and the Indian government.
Well, thank you so much for that, Parikshit. Surely keeping an eye out on all of those developments. But in fact, let's also listen in to what US President Donald Trump had to say on this.
Oh, it's so terrible. My position is I get along with both. I know both very well, and I want to see them work it out. I want to see them stop. And hopefully they can stop now. They've gone tit for tat, so hopefully they can stop now. But I know both. We get along with both countries very well, good relationships with both, and I want to see it stop. And if I can do anything to help, I will be there.
And the government of India has also convened an all-party leaders meeting which will take place at 11 a.m. today, while Home Minister will speak to the chief ministers and other officials of the bordering states.
Well, on that note, let's slip into a very short break. Up next, we tell you how these overnight cues impact our own Indian markets. Stay tuned.
Welcome back and thanks for staying tuned into Power Breakfast on CNBC TV 18. Now let's take a look at what the Asian markets are doing this morning. How have they opened up? A bit of a mixed opening is what we've seen coming in. ASX 200, a muted start is what we saw there. It is flip-flopping between the red and the green. Nikkei just a 0.1% of gain. Hang Seng 0.2% of gain. Taiwan Index managing to hold on to gains of 0.5%. So we're seeing a bit of a flattish to a muted start coming in for most of the markets. Some of them have seen a recovery from the day's lowest point as of now. Let's look at the Nifty implied open and what is that indicating for the Indian market. We're seeing a bit of a decline there as well. Negative bias, 45 points down is what Nifty implied open is indicating. We'll see. Like yesterday, if we are going to see a recovery coming in, will be key to watch out for. Wamakshi from the Indian markets. But as of now, a 45-point decline is what we're watching out for.
Well, absolutely. A 45-point decline in the early trading session. That is what the GIFT Nifty is indicating. But let's also look at the US market. Wall Street ended higher despite a choppy trading session after the Federal Reserve left rates unchanged and signaled uncertainty in inflation and possible higher unemployment S&P 500 rose by 25 points, Dow Jones rose by 285 points, and the tech-heavy Nasdaq saw an uptick of almost 48 points. CNBC's Steve Leisman brings more on the Fed front.
Fed officials maintained their holding pattern for monetary policy at that May meeting and suggested they could be on hold for a while longer until the fog from the economic impact of tariffs and other fiscal policies clear up. The Fed said in its statement that, as Melissa said, the risk of both higher inflation and higher unemployment had risen. That's the stagflation problem. Even while the economy continues to expand at a solid pace, unemployment is stable at a low rate and inflation somewhat elevated. Asked whether there had been any progress on the Fed figuring out which side of the inflation unemployment mandate it would most likely need to address, Fed Chair Powell said, still too early to say.
I don't think we can say, which way this will shake out. I think there's a great deal of uncertainty about, for example, where tariff policies are going to settle out, and also when they do settle out, what will be the implications for the economy, for growth, and for employment. I think it's too early to know that. So, ultimately, we think our policy rate is in a good place to stay as we await further clarity on tariffs.
So the market continued to price a July rate cut with some confidence at 70%, and two more cuts this year, one in September, then the other one in December. But that 23, or what is it called there on June, there's a 23% probability on a June rate cut. That shows the market hearing the Fed loud and clear. June is still too early to know how monetary policy should be steered amid the profound changes and uncertainty that's coming from President Trump's tariff.
Thanks so much for that. Now, the Federal Reserve Chair Jerome Powell states that he and the committee remain committed to the dual mandate goals and will have time to take the appropriate actions as and when the economy develops. Listen in.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Despite heightened uncertainty, the economy is still in a solid position. The unemployment rate remains low, and the labor market is at or near maximum employment. Inflation has come down a great deal, but has been running somewhat above our 2% longer-run objective. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. The risks of higher unemployment and higher inflation appear to have risen, and we believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments.
Post the Federal Reserve's policy decision to hold rates, Chief Market Strategist of Jefferies, David Zervos, comments there is a clear case for bringing policy to a neutral state. Let's listen in.
I do think there's a very cogent case for bringing policy back to neutral rather quickly. We had an incredibly volatile April. An unbelievably volatile April, where correlation patterns went out of whack to the tune of something we haven't seen in over 40 years, really, or at least in my market experiences. And I think there was a pretty significant change in inflation expectations in the break-even space that suggests people are looking at falls in inflation on a forward basis, one-off price increases that are then followed by weakness because of what might happen with tariffs. And I think there's lots of other supply side effects that are disinflationary that are lurking on the deregulatory side. So why we're at 100 to 150 basis points, maybe even more, above neutral and continuing to do QT escapes me a little bit.
Also, the former Fed economist Claudia Sam says that the Fed has not taken a hawkish stance, rather reinforces the current uncertainty as Fed is yet to take a call on the course of action for the dual mandate goals. Listen in.
The statement reinforces that they see risk to both higher unemployment and higher inflation. So the dual mandate and conflict. Now, that is a situation we have not seen the Powell Fed in before, and frankly, it's not one, thankfully, we've seen the Fed in very often. It's important that they really set the stage, and now it's going to be an opportunity for Powell to expand on what does that mean? How are we evaluating? It's not that they're putting more weight on inflation or on employment. These are co-equal in the dual mandate. It's just they're going to have to assess how far is inflation going off track, how far is unemployment going off track. And then an important thing that Powell also talked about in his April speech was, and then how quickly do we think they'll get back on track? Like, how much work does the Fed have to do?
Well, double-line capital's Jeffrey Gundlach thinks uncertainty continues to loom, not just in the markets but also in the Federal Reserve Monetary Policy Committee. Let's listen in.
The word of the day in the press conference is uncertainty. I mean, he said it's too early to know, don't think we know, phrases like that all the time. So I can't really blame him. I mean, we are in sort of uncharted waters we don't know what the tariffs are going to do to inflation. There is pressure a little bit on the rising unemployment rate. I think that it's a little bit of uncertainty. I'm surprised the market didn't act worse on the stock market because it sounds to me like we're back in Mr. Magoo land, where we're in the car driving around and he admits that there's risks, higher inflation, higher unemployment rate, but he says, I can't explain to you what we need to see to get concerned about one side of the mandate or the other, so we're just going to wait and see which tree we bump into.
So that's all the global market action that we have for you all this morning. But how is all this going to be impacting our Indian markets? We have a team of research joining in with us to set you up for trade, tell you which are the important stocks to watch out for, as well as the cues in the world of F&O. Hormaz, good morning. I'm going to start with you. Today is going to be expiry. We have a lot of handover that's coming in from the global market. So what is the indication and factors that we're keeping an eye out on in terms of cues for the market?
Well, indeed, and you keep an eye out on a lot of things actually, but of course Operation Sindoor remains the key monitorable, the progress made over there, the situations evolving at the border, that will continue to remain the key monitorable for today's session as well. And just like yesterday, the bulls will be hoping for a measured and a matured response to the events that unfolded yesterday. We opened gap down but recovered most of those losses, ended in the green in yesterday's trading session on the Nifty, closing above the mark of 24,400. A big contributor to that was the Nifty Bank, led by HDFC Bank, SBI, Kotak. All of them contributed to the gains in yesterday's trading session, and that 24,400 to 24,600 range remains the one to watch out for the Nifty. Yesterday's low of 24,220 is the first important level on the downside. In case of any, that will be the first one to watch out for. But of course, we need to watch out for yesterday's high as well on the upside, and those levels of 24,600. And for the Nifty Bank, yesterday's low of 53,900 remains the first line of defense for any potential fall in the banking index as well. Of course, as I mentioned, Operation Sindoor will remain the key monitorable for today's session. Of course, today is the weekly expiry as well, and it is the day when a lot of sector leaders report results, be it L&T, be it Titan, be it Asian Paints. That would be an important monitorable as well for the index. Of course, there are a lot of broader market names as well reporting results. Earnings reactions will continue, but for now, the handover is a positive one, but for domestic triggers will be the important ones to watch out for. The GIFT Nifty for now indicating a start marginally in the red for our own markets.
Well, marginally in the red, that is what the GIFT Nifty is indicating. But we now have Mangalam joining in with cues from the F&O space. Good morning, Mangalam.
Good morning. So, like you pointed out, it is a Thursday, it is the weekly options expiry, a lot of cues coming in from local and international factors. But amidst all of this, if you look at the market, it tells you that maybe there are no cues. I'll tell you why, because there have been such narrow-ranged consolidation. Yesterday, the mid-cap index did a lot better. That was heartening. But if you look at it over the last 4 trading sessions, after the big rally that we've seen from the lows, the Nifty is consolidating between 24,200 to 24,450 itself. A 50-point here and there, sort of, from this broad range is what we've been seeing. Nifty high of 24,589 on the 2nd May and high of 24,450 yesterday. That's mainly been the broad range on the way up. At the lower level, 24,200 to 24,350 has been the support zone for the market itself. So 200, 250 point sort of band is what the market has been meandering around. Cash market flows are positive. Both DIIs and FIIs, they continue to buy 14th straight session of FII purchase in cash market. But the headline for this morning is definitely the FII purchase in index futures. 469 crore worth purchase. And there you have that chart up for you on the screen. The last number is plus 458 and 50% long exposure. It's the first time FIIs have gone net long in index futures all the way since October 4th, 2024. So this is a seminal moment. Very important to see where the market goes from here on, because the clients are on the short side. For today itself, again, this range is likely to hold out. That's what option writers are believing. 24,400 call and 24,300 put. fairly active. Option writers expect a 24,250 to 24,450 sort of range on the frontline index. However, were we to break out, there has been active call buying at 24,500 and 24,600 as well. So I'll keep an eye out on that. And in terms of stocks, I'll definitely watch out for Asian Paints. Had been recovering from lows, but ahead of numbers, a lot of short positions have been added on that stock, ended about 3.5% lower in yesterday's session.
Okay, Mangalam, thank you so much for that. We'll keep an eye out on cues in the world of FNO. But which are the important stocks to watch out for in today's trading session? We have Ria to give us all the stocks, as well as give us the list in terms of earnings as well. Ria.
Well, yes, good morning. Let's take a look at the stocks that are going to be in focus today. We have a lot of companies reporting their Q4 numbers. First up is Dabur. The net profit has seen a decrease of around 8.5% over the previous year. And the EBITDA has also gone down by around 8.5%. Margins have also seen a contraction coming in at 15.1% versus 16.6% that we saw in Q4 of last year. For Blue Star, the net profit and revenue have both have seen increases of around 21% over the previous year. Margins have been largely stable at 7%. For Coal India, the net profit has seen an increase of around 12% on a year-on-year basis, and EBITDA margins have also seen an expansion coming in at 31.2% versus 29.8% that we saw in Q4 of last year. And further, they've also signed an MOU with AM Green Ammonia India to supply renewable power for its green ammonia project. Tata Chemicals has also reported its Q4 numbers. This time around, we've seen a net loss of around 56 crores versus a loss of 850 crores in Q4 of last year. EBITDA margins have also decreased, coming in at 9.3% versus 13.8% in Q4 of last year. And they're also going to raise up to rupees 200 crores via the issuance of NCDs. For Symphony, the net profit and EBITDA have increased by around 65% and 88% on a year-on-year basis. For the revenue, that has seen an increase of around 47% over the previous year, and margins have also come in at 22% in this quarter. For Voltas, the net profit has come in at 241 crores in this quarter. EBITDA has seen an increase of around 75% over the previous year. Margins have also seen an expansion to 7% versus 4.5% in Q4 of last year. For Niva Bupa Health, net profit has seen an increase of around 31% over the previous year, but the operating profit has gone down by 43% on a year-on-year basis. For United Breweries, the EBITDA has seen an increase of around 31% on a year-on-year basis. Margins have also improved to 8% versus 6.7% in Q4 of last year. Volume growth has been seen at 5% versus our estimates of 4 to 5%. Shifting away from earnings, K Fintech will be in focus. Some sources have said that General Atlantic PE is likely to sell approximately 6% of the total share of the company via block deals today, and the deal is likely to be at a discount of 5 to 8% versus yesterday's closing price. So keep your eye out on all of these stocks today.
Thank you so much for that, Ria. But on that note, we're going to slip into a very short break. And after the break, we'll get you cues in the world of commodities. So stay tuned in for that.
Welcome back. You're watching Power Breakfast on CNBC TV 18. Let's get you the latest from the White House. Donald Trump has posted on Truth Social that a big news conference on major trade deal will be held today evening, India time, and a first of many trade deals will be announced. Meanwhile, New York Times is reporting that the trade deal could be announced with the UK, though details of this agreement are not immediately clear. Vinny?
Absolutely. But on that note, let's go across to Manisha, who's here to tell us the important cues in the world of commodities. What are we watching out for? A lot happening on the global front as well. Manisha, good morning. What are you keeping an eye out on today?
Well, thank you for that, Vinny. I'll start with the gold prices, where we are back above $3,400 an ounce. Well, there is uncertainty around the U.S.-China trade talks, and the U.S. keeping rates steady for a third meeting in 2025 is something that doesn't augur well for the market. But then there are higher risk of unemployment and inflation, as said by the U.S. Fed, and that is what really seems to be supporting the market. When I look at the crude oil prices, well, there is a rebound after 2% of decline on Wednesday. Remember, the prices did hit a 4-year low as well in this week itself. So there is some bit of a sanity coming in for the crude oil prices. The US Treasury SECI will meet China top economic officials on 10th of May in Switzerland, is what is supporting markets a bit. Having said that, also the U.S. inventory's decline in the previous week has been supportive. The markets also will watch out for the fourth round of nuclear talk between U.S. and Iran on 11th of May in Oman. So when you look at the next 5 or 6 trading sessions, there's a lot of data and a lot of events coming in, and that seems to be supporting the crude oil prices at this point in time. What is not being supported is the metal prices. Aluminum has continued to decline, trades below 2,400. You have China iron ore prices now trading at a 6-month lows as well. And copper prices, even though have seen a bit of a gain because of decline in US dollar, still continue to trade at a multi-month lows in the markets today.
Okay, Manisha, thank you so much for that. Surely keeping an eye out on gold, crude prices, where that's going to be headed as well. But that's all the time we have on this edition of Power Breakfast on CNBC TV 18. Thank you so much for tuning in. Up next, you have Passed Morning Call.